Hello and welcome to this conversation on Bloomberg Quint. Our guest today is someone who has come to be known for his brilliance, his integrity, and equally his wit. Over the years, he has dissented on many decisions that the government may have wanted to take or any political leaders may have wanted to take where he thought the interests of the economy were not being upheld. He has equally given advice, and those who have taken that advice have been better for it. Joining us today is Dr. Y.V. Reddy on the launch of his new book, Advice and Dissent. Dr. Reddy, congratulations and thank you.
No, thank you very much. But I must say that that I gave more advice and less dissent. I think that I should recut.
That's why advice comes before in the title of the book.
And second and more important, there's a general impression that I have been very successful. But the credit should really go not to me, but to those who allowed the dissent. See, the political leadership, the intellectual leadership. Imagine the configuration of people in 2004 to 2008, Manmohan Singh, Rangarajan, you had Monte Carlo Walia, Chidambaram, their experience, they are seniors, and still they allowed dissent, they allowed discussion. So I think the credit for allowing dissent should go to the leadership, and for the country's progress, encouraging dissent. In fact, I would say those who are in power should encourage dissent, and I think that I would give credit than to myself.
So then you think your reputation has been built on both sage advice and sage dissent?
Yes, advice, dissent, and sometimes behind the scenes dissent also.
I was going to come to that, Dr. Reddy. One of the things that comes out through your book is you got a sense of humor very early in life and you used it nicely. You put it to use nicely many times, and you were quite mischievous, from calling out sick or going on leave when you were asked to do things that you didn't want to do, to saying that I will check myself into hospital, to avoiding ministers.
To avoiding ministers till they forget the problem. Yes, no, it's sometimes, very often people take themselves seriously, and more so when you are in power and you think you are in power. I think the best thing is to realize that these things will pass. One test I always used, in fact once I told my boss when he was getting very agitated about a problem. So I said, sir, think of one thing. Next month, will you remember that? If you can't remember that, that's not important enough. So I think you can take. In fact, I took my life as well as my office work far less seriously than the book depicts.
Not in instances, and I'm going to now get into the books where you've changed the course of the economy. You people who have been with you through your work. I think the one chapter in your book which stands out and probably will continue to do so till the economy makes another sharp turn is the 1991 chapter. I don't want to give away for the readers on what you say, but I think what comes out is the extent of desperation, if I may use the word, that existed then, and how it was pure smarts and understanding of the economy, perhaps the global economy, which allowed you all to shepherd us through that process.
See, that was easily most tense period because political leadership was not in position in some ways. That was a difficult situation, and in some ways I had the advantage because I didn't have a deep understanding of the subject to start with. Therefore, I learned. And one of the first things that I did when I took charge of balance of payments is I went to Reserve Bank of India and spent 1 week and met deputy general managers. So that helped me in some ways. But the real issue, I would say, is that you really didn't know how much you are authorized to operate. One is to know. Second is how much freedom you have because of political vacuum. In some ways it gives you freedom, in some ways it doesn't give you freedom. Third is where you have to draw a line between disclosing the problem and enhancing the fear. You must convince people that you are handling the problem, but you should also make sure that it's, so these are partly judgments. And there I think in some ways one great thing that has happened across the board, across the levels, whether it is RBI, Ministry of Finance, every professional, every civil servant was very clear that this is a crisis and we should not allow our country's reputation to go down. That was very, very clear. And I think that really, it shows the character of the nation. and the sense of pride, with all the differences, complaining, everything. So I think I would consider that that is a glorious period in the history of our country.
In your book, you bring up the speech in which you talked about the Tobin tax. That was one of the instances where, Dr. Reddy, you were, can I use the word first, forced to back down?
No, yes, I mean, let me be very, I was not back down in the sense, I was compelled to almost disown, but I had reason to do that. Point is that I was talking about a Tobin tax, which is a tax on financial sector. To the extent it is a tax on financial sector, I have legitimacy to talk. But to the extent it is a tax, I have no legitimacy to talk.
Fair enough.
So, one fiscal authority, the finance minister, first round, he clarified, he spoke to me, he explained in the TV that I spoke to the governor, and as I explained in the book.
Yes.
But after that again, when he comes back and says this is not enough, then there is a legitimate reason for the government to say you back off and I can't go forward. So that is why it is. So in a way it was a willing back off. Not happy, but legitimate willing back off.
There was some sort of logical justification
yes,
too.
Yes.
Dr. Reddy, I want to move to your Reserve Bank years as well. Now, there was of course great acceptance and in the international circles also what you did with the Reserve Bank. As a monetary authority, you think during your years, building up through Dr. Jalan's years, Dr. Rangarajan's years, your years, the Reserve Bank was at the top of the league in terms of its respect and the authority it commanded as a global monetary authority?
Yes, I would certainly say so. Yes. Especially the way we transited from total fiscal dominance. And so I think it has been done very well under the collective leadership of Manmohan Singh, Chidambaram, Yashwant Sinha. Yashwant Sinha's contribution is not that much recognized, but they are all critical people. And and Bajpayee, of course. They brought about transformation through very no big noise, and it was just done professionally as part of it was a silent revolution in the relationship between the central bank, and central bank was projected as the real central bank, and it definitely gained respect in the community of the central bankers and financial markets.
On the flip side, Dr. Reddy, how successful were you as a banking regulator? I think in your book you expressed disappointment at one point on banking sector reforms.
First about me, then about the RPL, let me put it this way. As far as I am concerned, at least I felt, in fact I gave highest importance to regulation, more than monetary policy, in my view. It's very difficult job, it's nitty-gritty job, and starting from governance. The regulatory actions taken were huge. In fact, very interestingly, I am accused of being conservative because I took regulatory actions over the banks when the asset build-up was there.
Yeah.
So, all over the world, RBI is respected for taking timely regulatory actions,
yes,
including the idea of conglomerates. So, if you just see many of the today's, after the global crisis, many of the regulatory initiatives taken, even through the international discussions, they all happened in India before. Because they're elementary, I mean, they're nothing, no discovery, whereas the rest of the world was going for new wisdom, which was risky, untried wisdom.
Yeah.
So we believed in it. So as far as the regulatory initiatives, regulatory regime is concerned. Second, the health of the banking system in terms of capital adequacy, transparency, disclosure of penalties, all these aspects, there is a huge improvement between 2003 and 2007. Second, if you just see the private sector banking system, I think that amount of consolidation has not taken place in the history of India. But everything happened without too much of noise. Okay. So in that sense, the regulatory standards and consolidation and strengthening of the banking system as a whole has happened significantly, and at the same time we were in a position to ensure that the banking system was not seriously affected by the global crisis. In many other countries it was affected. So that is the story. Now, but why did I say that I was disappointed?
Yeah.
That is an important issue. I was disappointed because the public sector banks account for 70% of the system. So public sector banks, there is one is the regulatory aspect, the other is the governance. The governance standards generally influence or generally critical to the inherent strength of the economy and more important efficiency of the functioning. So as I explained at great length, the public sector banks governance standards improvement despite the best efforts we could not ensure. Similarly, the necessary incentive mechanisms and HRD, human relations changes required for enhancing the skills significantly, that has not happened. So that is my disappointment, because if you can't improve the governance and efficiency of this public sector banking system, which accounts for 70%,
yes,
that constrains the totality of the financial sector. So therefore, my regret is that the most important component of the banking system has not improved and the way I would have liked it to be, number one. But I also want to clarify that don't think that it is a vulnerability to a crisis. There is a difference between vulnerability and deficiency. Because it's a public sector bank, because the government owns, there is virtual unlimited liability. So it is not a vulnerability problem. Very often in other countries, when there is a banking system, there is a vulnerability problem. Third and most important is, what is the people's trust in the banking system? Very often people judge the regulation according to the financial markets. Whether the financial markets think that whether the regulation is appropriate or not, I think that is not the real test. The real test in my view is, how far are we able to maintain the trust and confidence of the people in the system. In that, I would say that we stand out as one of the best regulators. RBI, I mean we meant RBI, stands as the best, one of the best regulators in the world. There are very few emerging countries where many of the citizens don't keep their money outside. There are some other countries where even the central bank deputy governor, I got a message the other day, one of the people who deals with rating in South America and Latin America, and he said that there even central bankers keep their money outside. You are lucky. So therefore the limited answer is yes, efficiency wise we could have done a lot more.
Are we paying the price for not having tackled that issue now? I mean, you're seeing what's happening around you. I know you're saying it's not a crisis in the sense that no trust in the banking system remains, but yet we have numerous banks with NPA ratios 11, 12, 21, 22. How is that acceptable, sir?
Let me explain. I think this is the magnitudes, as you rightly said, the magnitudes are such that a single explanation is not enough.
Single?
Explanation is not enough. Single explanation is not enough. It has to start to, I believe the way it's better to have disaggregated analysis. One is the banks were encouraged to invest rather than do working capital. And when you do a lot more investment, and that is not their specialization, particularly infrastructure, that may be one reason. They are doing business which they are not very familiar, but because the national priority that is pushed, that's one possibility. Second is that after that there are in certain industries there is an industry cycle. It may be steel, so I think partly it may be industry cycle. There is a third thing. The third thing is it may be partly because after the crisis there is a stimulus.
Yes.
It is quite possible fiscal stimulus, monetary stimulus, and more important the regulatory forbearance that was given. Whether it was given excessively or it lasted longer than necessary. There was fourth reason. And there is a fifth reason, of course, the capacity to and governance also. Yes, these are factors. So I would say there are multiple factors, but among these factors I would certainly say governance is an important factor. One way of comparing it is, take the private sector banks and public sector banks. The difference in their NPA situation explains the contribution of governance, good or bad governance.
That's very true. But sir, what do you think of in your book, of course you talk about at that point there was some talk about consolidation. Actually that budget speech of Yashwant Sinha that you referred to, if you read that budget speech and the banking section then and now, the situation is remarkably similar and the conversations are remarkably similar. Again, we are talking about consolidation. In your book you said that in that time you had said consolidation cannot be the end. It has to be done with a purpose in mind. Currently we are doing two things. The Reserve Bank has directly gotten involved in bad loan resolution, and we are talking about consolidation without giving capital to these banks. How comfortable are you with each of those parts? First, the Reserve Bank's involvement, and second, this scenario where lack of capital is being, driven to force consolidation.
There are too many
things. Okay. Okay, the first one, the Reserve Bank's interference or involvement in NPA resolution.
I think conceptually it is not defensible.
Not defensible.
Not defensible. Because the job of a regulator is to tell the bank, say that you do not have adequate capital. You bring adequate capital because I have to protect the depositors' money. I have to protect the system. It is the business of the bank management, bank board, bank owner to do their job. If they don't do their job, the regulator has to take action, period. Now, it so happens the major problem is because of one owner. That owner happens to be the government. So that's one part of the story. But if the government as a owner is not able to do it, then it has to handle only from that side. Instead, it is directing the regulator. So maybe because in the crisis situation it is being done, so it may be called an unconventional measure, it may be defensible, but from a system point of view, this is not desirable. So if the problem has to be solved, if it is necessary, do it quickly and then get out of this somewhat inconsistent situation of a owner not being able to perform the ownership function and therefore asking the regulator to do the job of the owner. I think so that is the inherent situation.
The second part is the owner not being able to provide capital.
I think there I have a slightly different approach.
Okay.
The capital, what does a capital mean? A capital is required to make sure that the depositors have enough money or the system has enough money. The capital becomes important when there is limited liability. These banks, public sector banks, are constituted under the statute of the government, and the sovereign cannot have limited liability. A sovereign by definition is unlimited liability, and therefore the injection of capital is essentially to meet the regulatory requirement and convince everybody that I am also behaving like any other owner. That is why I would say that there is no threat to the solvency of the system, because it is even if the private sector gets into problems, the government which bails out. So therefore the injection of capital is only to meet the technical requirements of the regulator. So in my view, if I were to analyze the situation from an academic point of view, you have many options. One option is to do whatever we are doing in terms of NPAs, but that is also in a way the way the NPAs are being tackled is a systemic problem. These are being handled separately. So the last time, for instance, in the 90s when Professor Manmohan Singh was finance minister, how were the banks given capital? You know how they were given? It didn't have the fiscal deficit. Yes. The government borrowed from the banks and gave it as capital. Yes. Okay. They contributed to the bond. So basically what the government said is, I am prepared to take the risk, I will take the money from the banks. So they gave the bond to the banks, and the banks gave the money. The same money they put it as equity. And from the government's point of view, though for a private individual who will say, how can you borrow and give, from the government's point of view, it is solvent enough to borrow. Okay? So that's one method. Second, it has not happened anywhere else, but one of the possibilities is to say that the government can give it a callable capital. A regulator has to be innovative, for instance. You can say, you give the callable capital. That means you need not put in the money today as a fiscal deficit, but it's a special type of shares. You don't have voting power. But as owner is virtually saying, so you give a callable capital, and therefore the regulatory requirement is met, and then you carry on. Because while all this is important, in a way being tough is important. There should be realization that there is a heavy price for NPAs. I think we cannot have for long a situation where the credit growth is low, credit is choked up. And credit, so in a way the credit flow is choked up for a technical reason of adequacy of capital for public sector banks, where The purpose of capital is served even without the capital because it is government. So if you go through the underlying logic, I think the innovative measure should be to ensure that the capital is available and needed, while separately taking action about cleaning up the affairs. So I personally, I would explore a collaboration between the government and the RBI to remove the choking, to have innovative measures to remove the choking of the flow of credit, rather than make the flow of credit something which is subject to the solving of a bigger problem, because that problem of NPS is not going to be quickly done. There's huge reordering of the situation involved, and we can't afford to choke the credit growth for too long. So these solutions that we are attempting may take longer than required, though they show the determination to handle. And so that is something which I am sure the government, they are weighing the advantages and disadvantages. But I think you have to take this call, how long it will take to ensure that it moves.
And consolidation is still not the answer.
In any case, consolidation takes. See, we have to make a distinction between the stock problem, the flow problem, and the current issue. So we have to, the current most important issue is the credit flow. And how do we ensure that the credit flow happens so that the economy grows? And secondly, we must also recognize that if, suppose the credit is, the economy is growing at 7% and on nominal terms 7 plus 5, 4 or whatever, 11, 12. Now the credit growth has to be slightly higher than that.
Lower than that.
If it is lower than that, but if the economy is still moving at this pace, then somebody else is giving money. Who is giving money? Is it mutual funds? Now, if the corporates are not healthy, then somebody is going to take the hit. See, if the banks feel that they don't deserve money, but they are getting money from somewhere else, so when the chips are down, maybe the mutual funds will be in trouble. So that's where you have to take a financial system. That's what in my chapter also I call it a financial system. So if you are analyzing a complicated problem like this, you don't only look at the credit growth of the banks. If the industry is getting credit, is getting from where? Which credit is being substituted for the banks? So are they also vulnerable? If the banks are not giving, are they vulnerable? Are they not vulnerable? They may not be vulnerable. It may be only a technical problem. But from a regulatory point of view, from a system stability point of view, we have to look at the relative shares of the credit growth and the relative shares of vulnerability, right?
Because eventually it's the entire financial sector that has
so if it is true that the corporates are weak or over leveraged as they are saying, and foreign currency over leverage, etc., that problem may not be confined to banks. And then even bigger issue, some of the banks may be investing in mutual funds. And when you are exposure, they are not, their vulnerability may not be shown in your balance sheet. Right?
Yeah.
So therefore the linkages between bank, corporates and non-bank financing. See, in an extraordinary situation, I am sure the RBI is doing that, and maybe we still don't know fully, but I am not fully aware, but I think academically or analytically this is important.
So you wouldn't agree, I come back to my first question, that the Reserve Bank has been a more successful monetary authority than it has been a banking regulator?
No, in fact, I would say that historically, I would, because let me put it, historically why it should take credit, because it has been able to handle banking regulation in spite of public sector banks owned by government being dominant. So in a way government also has not been that irresponsible, I am sure. But overall, I think in terms of banking regulation, globally we have high respect. The challenge of monetary policy is a recent phenomenon. Let me put it that way. The monetary policy came to be, real monetary conduct of monetary policy has come only after the automatic monetization was put in into. So we are talking of 10-15 years. 10-15 years. So the monetary policy is 10-15 years. In this 10-15 years it has done in monetary policy. In fact, it has gained a high profile in monetary policy. But the amount of work that it has done on the regulatory side, I believe, is huge and definitely globally highly respected. Yes.
Dr. Reddy, I want to move to another issue which you dealt with, of course, in your book as well, and that's the issue of inflation in India. And that also, the whole framework has, I guess, evolved. During your time, and you write about this in the book, you had a self-induced or self-imposed target, so to speak, or a medium-term objective, flexible objective on inflation. Since then, we have moved to an actual formal inflation inflation target. You also write in your book that the RBI's control over inflation is relatively limited. That continues to be the case, right?
I mean, I wouldn't like to comment whether it continues to be the case, but there are two things that happen. One, the position about the global wisdom on inflation targeting, that itself has changed. During my period, there was virtual unanimity that inflation targeting is good. After the crisis, there is a change. Now they call it flexible inflation targeting. So in a way, therefore, whatever I have written was in the context of quote unquote inflation targeting, and from what I understand, what has been adopted now as inflation targeting is a flexible inflation targeting. So it must be slightly diluted animal now. But the strengthening is through formal agreement, whereas earlier there was no informal agreement. So this is how the new animal has come. Now, similarly, whether there are new elements in regard to the transmission of the monetary policy. In terms of government securities market and money markets, which are important for transmission, during 2003-2008, significant improvements have taken place. I think from then on there is some improvement taking place in terms of the magnitudes and quality. I do not know. But I think the transmission should be more now than before, because over the period there is more financialization. So that's one positive I can say. And as far as the transmission through public sector banks are concerned, from whatever we read, the same procedures are continuing.
Yeah.
So I think the assessment might be made. Maybe it is in anticipation of an improvement in the situation. Sometimes you adopt a model expecting that accompanying developments will take place soon.
But you face significant pressure on interest rate calls during your time. I asked because we continue to see that with every subsequent governor. Now that we have a target, as soon as it falls a little bit below the target, everybody is crying, hoarse for an interest rate cut. Was that one big pressure point during your RBI years?
All over the world it happens. All over the world it happens. I still remember once I recall, I think as Minister, as Prime Minister, where the Prime Minister was about to decide on a governor who was supposed to be the very good professional, and many people didn't want it. So the secretary goes and simply tells him, sir, everything is fine, he's the best, but just elections are coming next year, and so the interest rate wise you may have then he was stopped. Yes, that is an incident. So all over the world this keeps happening, and I think in my days, you recall I refer to the fact that the minister was making statements, and
yes.
I protested. The minister, it's a democracy, which is right. So if the same thing is happening now, I cannot say there is something different. But there are two ways of looking at it. One is this communication is there, and how it affects the markets also is important. I don't think by itself it is bad.
Okay.
But the people, it is in the interest of the government to tell the people and convince the people that the interest rate policy and money and matters related to money and finance are apolitical. So the autonomy, etc., of the central bank is given by the government only to convince the people that they are apolitical. But if the government itself believes that I can do that job better, and I should tell the people that I am doing the job better, then the whole framework becomes different. So that is where I would say, if you see all the book, the quarrels arise because the government is not directing. They are prepared to discuss and then convince me. See, when Chidambaram, Manmohan Singh sit down and say, they try to convince me, I argue, they put pressure, all this is happening because in the final analysis, I am exercising my freedom. That is why there is influence. Yes. But the government is the creator. And I must tell you an interview which Alan Greenspan gave after all this crisis was over, when he was asked about this clean and lean policy. See, the clean policy is allow the asset bubble and later clean it, which most of the world adopted. The other is lean, you lean against the wind. Yes. And he was asked, and he said, I could have leaned against the wind, I could have tried to stop the asset bubble, but there would have been so much opposition in the democracy in a democracy, so much opposition that the Federal Reserve would have lost its independence. So we have to recognize that these should not be exaggerated. It is up to the government to decide what impression the government wants to give to the people about the autonomy of the central bank.
So there is the issue of autonomy, and on autonomy, I think some of your best one-liners in the book are on the issue of autonomy, whether saying that the government has given you permission to say that the central bank is independent. So you make the point very well there. But there is autonomy and there is involvement, right? Involvement on operational issues, seemingly mundane issues, which seems to have picked up. For instance, demonetization was a big involvement or interference on currency, which we hadn't seen at, barring one 1960s incident. Now there seems to be a lot more involvement in payment systems, which there is no need. Is there?
So let me first say about my statements. Only one statement you have quoted, that I have taken the permission of the minister to tell that I am autonomous.
That was a joking statement.
Not entirely.
Not entirely. Oh, okay.
Not entirely. But there is a second statement equally which I gave, that like inflation being a single objective, I was asked what's your single objective. I said to save Indian economy from government of India.
Yes.
So in a way, basically I am trying to tell the people that I have taken the permission, but my job is to protect the system from them. Okay, so
that was a serious statement.
Yeah, both, but first and second, but second is more serious. Basically, I am trying to say there is not that I am going to see and argue my case for what I think is in the best interest of the financial system. That's my job. And so, as quote unquote. So, in a way, if there are political excesses, it's my job. But I can, at the same time, I cannot question the final legitimacy of the government. So that is the complex relationship. So you see, the governor is never equal to, but cannot afford to be subordinate to government. Cannot afford, even if you want to. That's the problem. But anyway, now the second aspect is, again, this answer partly for the second follows. If the government in its public policy wants to tell the people that I am running the affairs, then involvement becomes open. Second, if the government wants to be involved but not tell the people that it's getting involved, it is through the influence. The second is to, and it's always a mixability. So, but in different periods of the government, I suppose, it happens. But in the, even if you see the so-called central bank independence, that all issue of central bank independence is only 30-year-old. Even in the West. It came up only in 1970s or 80s. Before that, the concept of independence. So it's not as though it's like God, a fundamental principle. It's contextual. And for us, we had a planning. So there is no question of central bank independence. So all this issue came up only in 1980s, and rightly so in the context of inflation. So the concept of central bank independence is not like right to freedom. It's an instrument for financial development and proper place for finance. So now if you say in the current context whether the involvement is correct or not, it is difficult to say. But if you assess that there is a crisis, and I mentioned also from my experience, RBI should be, central bank good to be independent. Number two, central bank becomes the first line of defense if there is a problem. Three, if the problem becomes a crisis, the government takes over. Now, if it is in the judgment of the system that the banking system and the NPS is reaching the stage of a crisis or is somewhere there, then government taking the involvement, you cannot question. There is legitimacy. But it's a different matter for the RBI to say that I can do better than you and you give me advice, but I'll do. Is one way. Then I said, no, that's not enough. So we have to do it together. So that is, so therefore it is the assessment of the problem and assessment of the relative roles. So I won't take a dogmatic view of the autonomy. I'll take a contextual view of the economy, and of the autonomy. I mean. Context of the economy.
No, I get that point, but if you're saying that a crisis-like situation can justify the involvement of a sovereign, where was the crisis-like situation in payment systems or in currency that led for the government to take a measure like demonetization, or now this sudden push towards a new...
Again, let me divide into two: payment system and demonetization.
Yes.
As far as the payment system is concerned, my own impression was and still is, that our payment legislation is one of the finest. In fact, we had sent a delegation to UK and got some studies made and came back, and it was done, and it was presided over by Nanamurthy of Infosys. And I believe that we had one of the world's best, among the world's best payment system, both in terms of the legislation, in terms of the technology and the system functioning. But some payments changes are being made. I think many of the changes that are being made in various matters, deposit insurance payment system, that is being done with a model in view. So there is a Financial Sector Reforms Commission headed by a judge, a very respected Supreme Court judge, with a lot of technical inputs. So that's a model. So we are trying to go through that model. Whereas the reform before was different. The reform before was that there was no prescribed model, and usually a central banker was involved, whether it is Narsimham Committee, Malhotra Committee, Tarapur Committee, and each one of them, Tarapur Committee, Capital Account. So they understood the system, they studied, they engaged the experts, they gave a reform. So I think that now the pattern of what leads reform is a model, and it's not necessarily owned by the people who are in the business. So my own view is invariably there will be tension, because the reform is not owned by those who are now doing their jobs. So how it will work out is different. So I have a feeling that all the changes are not necessarily out of shortcomings of the present system, but in order to be consistent with a model that has been set for itself by the government.
Okay. That's on the payment system. And on demonetization, does it not set a unhealthy
demonetization is an event.
But it tells you of the ability of a certain political leadership or whatever to interfere with the very core, which is currency.
Let me again explain.
Again, interfere may not be right.
That's
involvement.
Not even involvement. Let me put it slightly different. In fact, in some ways, it's more an issue of coordination than autonomy. In some ways, let me explain. Currency is issued because of it is issued under the guarantee of the government, and it is a legal tender because of the government, and both can be withdrawn anytime. Fine. So that's fact of life, and the government has legal right to do so. Does it have a moral right? Question mark. The people have put away the currency. Our central bank has said that I'll give you money whenever you want. If this note is not legal, it should be exchanged for a legal note, and that exchange, without saying so, is considered to be expected to be instant. That exchange is expected to be instant. That is the moral issue. Legally also, I say I undertake to pay.
Yeah.
So if this is not undertake, you have to give what is legal now. So therefore, the problem for the RBI in this case was that moral obligation with some sort of a legal backing. Technically, you can say, I didn't say I'll give it to the same time in my guarantee, but that is the problem. So this particular measure resulted in a situation where the promise that I will pay the bearer the sum off. So if that you declare that is illegal, then give me the legal tender. But when I go, then you say give it to the bank, I come tomorrow, day after, I give you later, or something like that. So that is the problem. And this is both are equally responsible. But the task undertaken of so much currency notes, of so much denomination, was such that it was almost impossible to instantly change the currency. So it is the task defined was such that there is a problem. Now, whether I presume that the RBI would have brought this to the notice of the government and the government, but if there was a few coordination, then the implications of this to the credibility of the RBI, etc., would have been thought through. But it is also possible that this has been thought through and then a decision has been taken, because a point had to be made. So in that sense, it is not an autonomy, but it's a coordination and a judgment of the implications on the system.
We'll say thank you so much. We're waiting for the next book, because I think there are lots of things you've left out in this.
Let us see, uncensored version you want, is it?
Yes, uncensored version, unedited, uncensored version.
I'll wait for the questions.
You'll wait for the questions. Thank you so much, Dr. Reddy. Pleasure speaking to you as always.